Now let's talk about the lowest common denominator, which is the regular equity markets. And just trying to understand, Nirav, let me start with you on this. What's your sense around where does all of this take us? Not necessarily in the next 6 months or whatever. We'll talk about that as well at the fag end. But what's your sense about where we go from here over the course of the next 3 to 5 years?
So, like I said, I think the construct of the economy actually surprised me in terms of what you've done the last 6 months. Given where the oil was, given where the inflation was, I think you've done phenomenally well, right? Both in inflation front, even in terms of if you look at any of the leading economic indicators like PMI. So, you are very, very well set. I suspect that you are getting into a stage where India will now have lower inflation as you move forward. Please,
Mhm.
we have to appreciate the fact that we started inflation targeting only the last 6 7 years. It takes time, decades, for any governor to establish credibility. We are going there. We are moving that direction. And as you see that, I think to somehow I believe that you've lost the decade, because if you look at credit to GDP ratio, it was at 50% last 10 years. That is going to change in the next 4 5 years, right? uh, Multiple facets. You got 100 unicorns, they'll come back to the markets. The structure of the Nifty will change in the next 5 10 years, right? If we're talking about financial inclusion, you're only looking at, I'm saying, UPI. We're talking about ODing, which now tries to democratize, all the listings on various platforms and stuff like that. Uh, why that? I mean, I just read yesterday again that her girl null jal,
Mm.
right? That in last 2 years has gone from 16% to 50%. Now think of it. Now this should have been in place 20 years back,
Sure, sure.
right? But the fact of the matter is that now this phenomenal improvement in productivity, right? When you start getting this access to basic hygiene, healthcare, the insurance scheme that has been running by the government, uh, I think that the market should double in the next 4 to 5 years.
Okay.
Broadly, I'm just looking at a similar 15 CAGR earnings, multiples remaining the same. Uh, that is a base level expectation that you should have.
Okay. So the Nifty 100, Nifty 150, Nifty 200 can very well do that. The top organized, as Krishna mentioned, they get larger benefits, etc. What happens to the broader markets, Nirav? That's the question.
I am more bullish on the broader markets than I'm on the only the larger cap companies, and that is largely because of anecdotal reasons.
Hmm.
We've got a conference now and next week, and we've
I
got
wanted to
150
ask you about
companies.
guys about that. Yes.
We've got 150 companies over there, so we've gone personally, met so many companies and all. So I have seen some phenomenal changes that have happened in terms of the way the companies are managed, right? Over the last 10 years, the way promoters have started approaching risk. If you look at this balance sheet, again, put the perspective that you've got this range of regulatory reforms like PLI schemes, and the fact that this geopolitical risk. I mean, I've met so many companies. The problem now seems to be not so much of a demand, it is more about supply. Look at textiles, right? I met so many companies are saying that, we can double the turnover. The fact of the matter is that I still need time to raise equity, debt, set up plant and machinery. The market is there, the demand is there, right? Papers, the sectors that are not thought about for such a long time, right? Auto ancillaries, building materials. Uh, so my sense, one of the things that I tell a lot of my investors is that this is a time to run a diversified portfolio, right? Generally, what has worked in the last 8 9 years is that you take 9 10% bets on large cap companies that's done well. I think that you can run a portfolio of 80 90 stocks, and I think you do phenomenally well. At least that is a view I'm having. Maybe KK can
No,
add.
I think, yeah, the energy levels of mid-sized promoters,
Hmm.
and when I say mid-size, I'm talking of companies in the range of say 2,000 to 10,000 crore market cap. Their confidence levels today about investing in their business and the kind of growth possibility that they see for themselves over the next 10 years in their chosen line of activities. Now, whether it be auto ancillaries, whether it be textiles or building materials, I think everywhere uh, they seem to be very, very confident about their growth prospects. Their balance sheets are so robust, their ability to borrow is also very, very strong. So my sense is that the broad market will obviously give at least 30 to 40% higher returns than what you can expect from the large cap companies, and which is rightly so. So the coming decade could be the decade for small and mid cap companies, and the entrepreneur spirit which is there and is going to be unleashed, and we will see so many of these unicorns possibly getting lifted. Yeah, there are some many of them which are possibly not earning today, so those things will, I'm sure, iron out, and they'll figure out how to make. But the energy levels, opportunities, And the best part is that it's not only the entrepreneur who has been in business for say 20, 25 years. It is the second generation in many of these companies who are raring to go.
Okay.
They see the opportunity for themselves. And so I believe that next 10 years, next 10, 15 years are going to be phenomenal for mid-sized companies.